the heck just happened to the stock of PayPal? Now, here's a stock I've liked for ages, ever since it was spun off by eBay in the 30s, way back in 2015. Since then, the online payments kingpin has had a remarkable run, but today the stock got slammed. It looked like it went headfirst into a brick wall. Problem? Last night, PayPal reported what I guess many were interpreting as a mixed quarter. A 2-cent earnings beat off a 67-cent basis, slightly weaker than expected revenue, up 13% year over year. And even though some parts of the business were red hot, like their Venmo payment sharing app, hey, that was up 80%. The company's forecast for the next quarter was softer than Wall Street anticipated. The guidance was only a little disappointing for the stock, which is owned by my Travel Trust, which you can follow along by joining the ActionAlertsPlus.com club. But perhaps because the stock had run up going into the quarter, it got slammed today. It's down more than $3 or 4% on a pretty good day for the NASDAQ. I think these numbers were pretty solid, and the bull thesis remains intact. Stock did just get a bit ahead of itself. Don't take it from me, though. Let's check in with the CFO, not the CEO, but the CFO of PayPal, John Rainey, to find out more about the quarter and where the company's headed. Mr. Rainey, welcome back to Mad Money.
Hey, Jim, it's great to be back on the show.
All right, John, look, you guys put up some pretty good numbers, but I know that the stock lagged. Some people thought that the guidance was a little light compared to what analysts were looking for. Can you tell us what goes into your forward guidance and whether we should say, you know what, maybe this thing is slowing down as a company?
Sure. Well, first, Jim, we were really pleased with the quarter, and it capped off what was a great 2018. We had 26% EPS growth, and we had a record for the number of net new customers that came to our platform in the quarter at 13.8 million. So really pleased there. And we affirmed the guidance that we gave for full year 2019 that we just provided back in October. But to your point on the first quarter guidance, there's probably three things that stand out that are impacting us. And in order, eBay is the first. So we still have 10% of the volume on our platform, which is eBay's business. And as eBay has discussed, they're expecting slower growth, so that has an impact on our business. The second, like a lot of companies are facing right now, is with a stronger dollar, we have foreign currency pressure. And with 20% of our business, roughly 20% of our business that is cross-border, that has an impact on us as well. And then lastly, and somewhat tied to the currency pressure, is there are pockets in regions of the world right now where we see slower growth than we did at this point in time last year.
Well, let's go over that top one, eBay. There's an outfit I'm pretty familiar with, Elliott Management. They're none too happy with the way eBay has been run. It does seem that maybe there's a bit of a shakeup. You know, got a couple divisions classified. You know that company really well. They've got the StubHub, and they got the main business of which, frankly, it's stagnant. I mean, can you get involved to try to make them better?
Well, we work with eBay quite closely to try to power e-commerce experiences that help our business, but also help theirs. And as I said, they're still a significant part of our business, 10% of our volume today, and will remain meaningful over the next couple of years.
Well, I mean, can you join Elliott and try to get this thing to go better?
You know, we're very focused on our relationship with them as a partner, and we're going to try to do things that are of mutual benefit to our customers.
Oh, okay, fair enough. Now, how about Venmo? We saw you're starting to monetize it. It seemed like that people overlooked that because of worrying about what you talked about with the currency and eBay, just basically disregarding what I think is the beginning of what could be a monster good revenue stream.
Well, Venmo stands out as really one of the shining parts of the quarter and the year for that matter. And you noted in your opening comments, but we saw 80% volume growth in Venmo in the quarter. And importantly, that's a 2-point acceleration from what we saw in the previous quarter. And in part of that, it's the monetization activities that we see right now. So 29% of Venmo customers have used it in some way that we're able to monetize. And we gave some guidance that when we exited 2018, we were monetizing Venmo to the rate of a $200 million run rate annually. And that's still a very fast-growing part of our business. So we're very excited about that. And there's many aspects to that. There's instant cash withdrawal. There's the ability to pay with Venmo at stores. And we also have a Venmo card now. And that's important because it allows the Venmo user to use this in an offline physical world. And when we look at the top spend categories of where that's used, there are things like grocery stores, restaurants. These are everyday use occurrences, which really plays into what our objective is with Venmo and PayPal broadly, is to become an everyday part of our customers' financial lives.
Well, you've been a straight shooter with us. There's always people who just they nitpick. I mean, I heard some people say, listen, what the problem is Bank of America, Zelle. And then another person, no, the problem is Square. Everybody's coming after them. Isn't there room for everybody in this?
Well, I do believe that this is not going to be a winner-take-all game. And I also believe that with the secular tailwinds that we see in our business, there is a bit of a tendency of a rising tide lifting all ships. But we're in an excellent competitive position here. We've got over 250 million customers on our platform, operating in 200 markets across the world, and 20 million merchants. And it's putting those two together, the 250 million plus consumers with the 20 million merchants, which is really where the PayPal value proposition shines.
Now, I remember when I spoke with Dan Schulman, we had this really great couple-hour teaching, and he was talking about everybody who has a cell phone who is in an area where there's not a lot of banking is a potential PayPal customer. Now, he talked about 2 billion. Interestingly enough, Facebook talked about 2 billion people today who are on Facebook. Is that your target? Is that your total addressable market, you think? Because that would be a pretty great market.
Well, the addressable market is enormous, and Dan alluded to the 2 billion people. Let me put a finer point on that. There are, by many estimates, as many as 2 billion people in the world that are what we describe as underserved financially. So meaning that they don't have access to a checking account, a savings account, even a home mortgage. But the unique aspect of those 2 billion people is that roughly 60 to 70% of them have a mobile device. And so with that mobile device, we can put a lot of the technology and financial services in the palm of their hands. So they don't need to go into a bank branch on a corner market to access those financial services. So that's a big part of what we're after. And a lot of people recognize that this is a huge addressable market. And we believe that the best way to capture that addressable market is by partnering with the likes of these technology platforms and major FIs to where we can go out and build on our complementary strengths.
Well, to me, it sounds like it's all systems going. Just had the misfortune to have a stock that ran right into the quarter, and that's what matters to me. That's what really happened. That's John Rainey, CFO of PayPal. Thank you so much, John. Good to see you.
Thanks a lot, Jim.
All right, like I said at the top of the show, if it ran into the quarter, and boy, did this one ever, you know what? Profit taking. I think that's a pretty darn good story. John Rainey, CFO of PayPal. I would stick with it, and I'd stick with it. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.